right, are we live? I think we are. All right, hello everyone. Welcome to the show. This is the blog webinar, and this episode we're gonna be talking about the hot and cold storage debate across Asia Pacific, with a look at the regulatory landscape as well. My name is Wolfie Zhao. I'm an Asia editor at the blog. Today we have an excellent lineup of speakers. I'm joined here by Mr. Jamie Solomon, who is gonna be the co-host and co-moderator for this show. How's it going, Jamie?
Hey guys, welcome. I think this will be an interesting and exciting 45 minutes. I'm Jamie Solomon. I run multi-party systems and blockchain for Accenture in the Asia Pacific region, and I'm happy to join this distinguished panel to probe at some interesting issues about the future of both cold and hot storage. Over to you, SJ. SJ,
we also have SJO from OSL. It's just the director and head of custody and prime at OSL, based in Hong Kong. I'm sure he will have some interesting insight from the perspective from the Hong Kong landscape. And we also have Glenn Wood, head of Asia Pacific at Ledger Vault. And Ledger Vault is pretty famous for its hardware wallet in the commercial market, but also has a big business on the enterprise side. So welcome, Glenn. And we also have Jumpei Miwa-san from the Financial Service Agency. Miwa-san is the Assistant Commissioner at the Japanese Regulatory Watchdog, who has been focusing on FinTech-related regulations. Welcome, Miwa-san.
Yeah, thank you. So, hello everyone. So, very pleased to be joined the this webinar, which highlight the kind of the hot issues on the storage, digital custody storage issues. So, very happy to join. Thank you.
Interesting. So, I guess like to kick off the discussion, why not like each one of the guests like kind of briefly explain to everybody about the latest regulatory development in your respective jurisdiction, specifically about digital assets custody, whether it's hot or cold storage. What are some of the latest regulatory developments in Hong Kong, in Singapore, and in Japan?
Yeah, maybe I can start off with that. So there was recently a whole wave of sovereigns that have come out and basically endorsing this travel rule step up from the regulators. From the language pretty much coming from the FATF. That's definitely coming into regulation, coming out in laws, but nothing really in terms of the actual custody proponent in Hong Kong has changed from the initial position paper. The SFC issued that in November last year. And essentially all it says is that you do require 100% insurance on your hot wallets. 2% of your total coin balances can only be there at any one time. And your cold wallet storage has to be 95% covered. So that still remains unchanged. So I'm aware of some service providers, nobody in this room I don't think, but that have actually sort of used the insurance premium policy for specie insurance on hot wallets, which is a bit of a misnomer if you ask me, because specie insurance by definition only covers physical assets that have been stolen. And if you're talking about hot wallets, yes, you need to take care of the HSM or the MPC, whatever infrastructure you're using. But I think the most important thing to ensure is actually the digital intangible assets on the wallet itself. So we have that covered, and I don't see that changing anytime soon from Hong Kong.
So do you kind of have to like regularly update with the regulator in terms of your hot and cold storage balance?
Yeah, so I mean, it's like with the auditors too, right? There will be a track record of everything we do, given that we intend to be fully licensed and regulated. As of now, we are approved in principle for the digital asset trading platform license. I am not involved in the conversations, but I'm sure dialogue is quite regular. And at the end of the day, we will have all these records for these guys to compile and have a time series data whenever they need it.
Interesting. Yeah, we can come back later at the latest like Hong Kong proposal for the crypto exchanges regulations, which can, I think, to some extent would have some oversight on the custody side as well. But yeah, what's up with Singapore these days, Glenn?
Yeah, so just to maybe take a step back and give you a little bit of introduction of what we do on the institutional side. We offer a service called Ledger Vault, which is an institutional custody technology. So we're not a custodian and we're not regulated, but we are global in nature. So we are supporting custodians and exchanges and other type of virtual asset service providers to comply with the regulations. So, we have some insight. We don't usually work directly with the regulators, but, we work indirectly because a lot of our customers are regulated institutions, either regulated today or to be regulated in the future. So from that perspective, I mean, kind of coming back to the topic, the hot and cold topic, I think the big kind of elephant in the room is the definition of what they are. So, I mean, I see two different definitions of cold. So one definition would be, a storage that is completely disconnected from online. Another type of definition is a storage that requires human intervention. So a storage mechanism where governance rules could be built, where it's not automatic. So hot will be automatic, where the keys are hosted online. So when a retail customer requests a withdrawal, then the hot wallet would automatically kind of use this API functionality to withdraw the funds. Those would be the hot wallets, but and there's no question about that. But when it comes to cold, there are cold wallets that are also connected as well, but protected with institutional level hardwares and other type of mechanism on top. So I think that is the very kind of definition that different jurisdictions have that are quite different. And I would say a lot of jurisdictions are kind of like trying to say that it's either cold or cold-like. So maybe Miwa-san can comment on that, because that's kind of like what I read from the rule books in Japan. But if you kind of compare the APAC regulations in Hong Kong, not so much in Singapore, but in Korea versus Europe and US, their definition of cold is not disconnected. It's like, you having a workflow where people kind of come in and they can, nimbly change the governance rules depending on how strict or how loose the regulation become. So, I mean, I guess, that's the topic that, I would personally want to focus on today.
Cool. What's the latest like regulatory development that you see in Japan?
Okay.
In terms of...
Yeah, thanks so much. So I see the many regulatory development and the proposal are made in the jurisdictions level. So let me briefly let me elaborate the background of our regulatory environment and the development in Japan first. So I think I just want to add on the background information of the regulatory development in Japan. So as you know, Japan is the first wave jurisdiction of the early adoption in the regulatory framework of the crypto assets by implementing the legislation requirements over crypto asset exchanges in 2016. This indicates the within the framework. So crypto asset exchanges are subject to the regulatory oversight by JFSA. So regulation of day one in 2016 requires the crypto asset exchanges to manage the customers' assets, segregating from the operator's account, and requires the crypto asset exchange to confirm the customer's identity for KYC purposes. The first wave of the registration filing process has been made around 2018 and 2019, but amid the transition phase, several hack and mega breaches occurred at the several crypto-asset exchanges. So this accident has given rise to the growing concern over the further needs of the consumer protections. So as well as the hack incident and mega breaches to crypto asset exchanges, so additional concern in the crypto asset are also underscored in the transition phase. So there is a concern over immaturity of the internal management of the governance system. So many people mentioned something about the management of photo and cold, custodial management. This is a kind of the governance issue and securities issues in exchanges. This is identified in the process of the our oversight, direct inspection to the crypto asset exchanges. So also the there are rising concern on the crypto assets, high leverage to crypto assets derivative transactions. So we should address this issue, and we have a concern over the how we protect the new type of the crypto businesses such as ICOs that frequently cause the scams to the customer. So we set out the day two crypto asset regulation in 2019. So we should address the concerns and or counter the lack of operational resiliency of the crypto asset exchanges, and of course that should enhance the our regulatory perimeter to the crypto asset exchanges, but also the digital wallet services providers, custodial service providers, and the derivatives, crypto asset derivatives, and the securities token offerings. So the data regulation, we set out some requirements to the crypto asset exchanges, including the digital custodial service providers. So we set out the requirement for the segregating the customers' assets that are secured by the account in the trusted services. So, and we set out the requirement to the manage the transferable crypto asset in the manner not relying on the internet access. So this means this is supposed to be a solution within the cold wallet. And we set out also requirement of retaining the identical asset to compensate for the potential losses, which could be incurred by the transferable crypto asset in hot wallet. So this means that the identical amount of crypto asset should be deposited or guaranteed as if the additional collateral is to be reserved, supposing the potential breaches. So it is also recognized by us that the solution of the digital custodies, hot and cold wallet management, or using the disconnection to the internet management system is not the central solution to build the robust securities framework. So we, in the name of the consumer protection, so we prioritize that the management to mitigate the risks and the vulnerabilities of crypto asset management by specifically stipulating the requirements for the cold asset management. So in this context, the further technological or cryptographic solution will be highly welcomed in the coming period. So today's discussion, we'd like to hear the technological or cryptographic solutions into the area for the secure management to the crypto assets. So sorry, long narrative. So sorry for my first intervention.
No worries. Interesting. This is kind of interesting to see like usual approach that different jurisdictions are taking, segregating the assets of companies and the customers and have requirements on cold and hot storage and using, regular audits. But I think, I guess like a bigger topic here is like the institution, embracing the digital assets as a future trend. And I do want to throw out this kind of big question to the guest here. It's like, what is the demand you see from institutions in terms of custody? What are the things that are holding them back? What are some of the hurdles they're seeing? And what can your business, how do your business fit into this narrative to help, kind of onboarding more of them to be interested in embracing digital assets in the future?
Maybe I can start on this. I mean, that's a very big topic, and obviously there's many areas that are holding the true the traditional institutions back from truly embracing the digital asset world. I mean, these could be some inefficiencies in the protocol, blockchain protocols, or it could be custody, it could be travel rule or AML. But since we're Ledger and we specialize in on the custody side, I'm just gonna provide a little more insight into what's happening on the custody technology today, and how that may be a blocker for the traditional institutions to fully adopt cryptocurrencies or any type of digital assets, namely stable coins or government coins or STO coins, right? So let me just share a stat. In 2019, there has been about $4.5 billion worth of crypto stolen. And that figure is actually about twice as much as what happened in 2018. So more crypto assets were stolen in 2019 than 2018. But if you look into the detail, in 2018, about 60% of the assets were actually stolen through hacks, through online hacks. So these are, the cryptos that are custodied on the servers and computers, and smart hackers were able to take control of the devices or the servers and to steal from hacks, from malware attacks and whatnot. But in 2019, only less than 10%, so 9.8% of the theft actually came from hacks. The remaining theft actually came from scams and insider jobs. So the bigger question is the lack of governance rather than the technology or like the assets that are being hosted online. So that's the big question. And I can maybe share a little bit of how the cold wallet, cold and hot wallet process work with the crypto native companies. So if you hear a catchphrase from an exchange saying, oh, 90%, 98% of the assets are stored in the cold, what does that really mean? It means that they actually either procure some hardware wallets like Ledger Nanos or Trezors that we produce on the B2C side, or they air gap a computer that's never connected online, and then they buy a very strong vault in the office, or they procure a vault facilitators, maybe some bunkers near the airport. Usually that's where a lot of the gold bars are stored, right. And then they put the keys inside there. But the problem is, number one, how do they actually move the funds from offline state to online state? Like, who does that? And we've seen what happened to a big exchange recently, about a month ago. A key person disappearing, and then your assets are either stuck or gone, right? So that's a big problem. There's nothing wrong with I mean, it's not, the assets aren't being hacked, but there's a key man risk. How do you move the funds? Who gets to own the rights or the secrets to how to open that box? And also, another risk would be to say, if there's a lot of inefficiency on the cold side, then you have to put more assets in the hot to support the day-to-day liquidity management and liquidity requirement. So we've seen another hack that happened on the hot, and that company happened to have more than $200 million in the hot wallet. If they had a better process on the cold wallet side, then they didn't really have to put $200 million in the hot wallet, right? And then also there's the new risk, the COVID risk. So these cold wallets having a physical presence and building governance rules that are not technology enforced, but that's like kind of like an agreement. So if there are 5 people in the room and we decide to share the secret, then we would have to come to a room like a bunker. Without anybody knowing, we have to perform our little secrets, and then we open the box. But now it's the COVID. So there could be challenges of people actually traveling into where the bunker is, the secret bunker is, and then putting the assets out of the bunker. And also, there's a lot of inefficiencies because crypto is digital, but cold wallet from a traditional sense, offline, bunker, it's like no different from putting your gold bar in a very secure safe. So, it kind of defeats the purpose, right? And then how do you change management? So say, for example, if five of us are the joint owner of the assets, if one of us decide to leave, then we have to change the entire structure because one guy will leave with a part of a secret. So how can you actually scale your business if your business is going to get bigger, and then if there's change management that happens quite frequently in the real business world, right? So I mean, these are the challenges, and I don't think a lot of the larger institutions would take that kind of a risk, right? So there's new technologies that's coming, the funds being readily available, right? Which means that the funds are hosted online. But back to my point about the data points, where a lot of the stolen assets were actually insider job and collusion and scams. There are technologies that allow technology enforced governance building where there's different threshold controls, different group of people that are managing different types of wallets and different types of assets. And they could be all distributed globally, and they can cast their vote in terms of making approvals, and then also through segregation of duty. So it's not like a simple multi-sig where 5 of us share the same fraction of the secret, but we take different roles. So say, for example, like a group of 5 people are managing the governance, whereas a group of other 10 people are creating transactions and approving transactions, for example. So there are these very strong, highly protected, secure solutions that also provides a very nimble customization on the feature side as well. And I think these are kind of like the technologies that's required for the true kind of large size traditional institutions to truly adopt the space.
Yeah, I mean, I guess that's a great point, Glenn, and I think it gets to another question that if we're just, I say just in quotes, talking about standard cryptocurrency or stable coins, it's one thing, but how do we approach the problem when every asset class is tokenized? And I can fractionalize and trade corporate bonds, government bonds, any fixed instrument I want through regular exchanges, not just through some specialized exchanges. How are we going to solve the problem then? Because if you look at what's going on, maybe not in Hong Kong yet or in Japan yet, but certainly in Thailand and beginning to go on in Malaysia, and what is going on in a slightly different way in mainland China, as digital assets become real for the large scale population, not just a small set. This problem has to be solved in a different way. We can't be talking about cold storage where things are offline and you have to hold 99% or 90% of your assets in that form. That won't work if this is ever going to be mainstream, I don't believe. And I guess I'd just like everybody else's views and opinions on that.
Maybe I can jump in there. So it's a good point that you raise, Jamie. I completely agree. Like when we get these exotic assets coming on board being securitized, it's going to be a major problem. Needless to say, the insurer is going to have to get comfortable with that. And I'm sure everybody on this panel is quite familiar with how stringent it is and how difficult it is to get a non-ERC20 token insured, really. So let alone these existing tokens, I can't imagine how that will be. Hopefully the insurance players, we're already seeing some novel companies trying some new different ways to insure a product. Maybe that brings it about, but maybe it's just shifting gears a little bit. I was actually thinking that not everything has to be in cold storage, right? I mean, just like we carry cash around for small denomination expenditures, like buying a pack of gum, pack of cigarettes in the convenience store. You don't use the money you keep in your safety deposit box in the bank. You use cash in your wallet. And then you also have like maybe like some midterm, like if you're running a business, if you have payroll, it comes out of your bank. But there's different avenues, different mediums to make these payments and these transactions to in the real world. I actually think that it'll be a combination of all these different these different wallets, thereby like whether it be some risk. Go on.
Yeah, I guess actually it's interesting because I think in traditional assets they're almost all hot.
Yeah.
Everybody has online accounts.
Exactly.
If I look at what's going on in Sweden and the e-krona, I look at what's going on in China with DCEP, that's all hot, all the time. If don't we have to be able to manage digital currency just like we manage cryptocurrency? Because it's going to be there, and it's going to be in the hands of people relatively soon.
Yeah, Jamie, go ahead.
Glenn. No, you go.
Right. I mean, I think you just answered. You just answered it. So, I mean, the aim of the movement of the technology players, the security technology players like us, we don't really focus on the traditional definition of the code, right? I don't think any of them are kind of building another bunker somewhere to protect these bricks of assets, right? I don't think that is the future. Right. I think the future is everything going hot. But we have done a lot of work in the history of mankind when it comes to cybersecurity. So there are cybersecurity agencies, there are cybersecurity certifications, there are hardwares that are built to do these kind of things, right? And of course, cryptocurrency is a very nascent and it's a very new asset class. But we don't have to just only think that even with the custody technology or the security technology, we have to reinvent the wheel. I mean, we can leverage what we've learned from the past as well. And then to your point, Jamie, we can put everything in a hot state. So I think going forward, the definition or people saying, oh, how much are in the cold, how much are in the hot, I think it will become obsolete, and then everything will become kind of like temperature agnostic, right? Very well protected by different type of technology, but also from a governance perspective, which I think is even more important than the security themselves, because people tend to be greedy and they tend to kind of think gray and always be tempted to steal these bricks and just disappear out of nowhere, right? So yeah, from that perspective, having the same or at least similar level of governance that these traditional asset classes have had and have evolved over the 300 years that this financial services became modernized is exactly the path that these technology companies, including Ledger, is heading towards.
Okay, may I interrupt the discussion? Okay, so
yeah, go ahead.
yeah, very very good discussion, and of course I'm in the regulatory authority. I'm working in the regulatory authority, so we are developing the kind of the requirement and the regulatory treatment to the crypto asset businesses. But as Graham mentioned, I think what we should recognize is that the crypto asset businesses is a kind of the financial transaction. So I think we would like to learn from the conventional wisdom of the traditional kind of the financial asset classes for proper management. So I think as I mentioned before, so through the inspection to the crypto assets operators, exchanges, so there are lack of the operational resiliency, the lack of governance, a lack of security. So I think we have two directions of the kind of digital and crypto asset businesses. So the one direction is the how we cover the lack of the resiliency or lack of the governance in the crypto asset businesses. And on the other hand, so we, developers, a lot of developers, many developers are currently contemplating the solution for the proper management of the, especially using the key management or some kind of the cryptographic solutions to safer management of the such as wallet and custodies. So I think the one direction that we have closely pay attention to the governance issues, and on the other hand, so we supporting the kind of healthy development of the technology side. So that's why we established recently established the kind of the discussing platform for multi-stakeholder of the crypto assets or blockchain technology. So we set out the BGIN, Blockchain Global Initiative Network, which gather from the various background, various stakeholders such as the academia, developers, regulators, or of course central bankers. So of course we very pay attention to the set two directions for healthy development to the blockchain community.
Yeah, I think that's a great point, right? I think this industry needs help, because if you look at the crypto companies, they're jack of all trades, right? I mean, they're financial institutions, right, for sure, but then they build custody, they build trading capabilities, they're marketing, they're looking after regulatory updates. But if you look at the traditional institutions, large and small, typically financial institutions are they focus on marketing, they focus on regulatory development. They don't usually build their own tech, especially when it comes to like deep tech. And they also need help from legal firms and like third parties. And the Miwa-san, you mentioned Bijin, right? I think that's also a very good initiative in terms of bringing some help to these crypto financial institutions.
Okay, I think the our we are supposing that the future aspect of the crypto asset business is first. So I think the currently we can regulate the crypto asset businesses because they act as the kind of intermediary function between the two parties. So we regulate the same approaches to the traditional financial institutions. So I think that it's a very regulatable for us. When we have the clear role of the intermediary function of the between the financial transaction. On the other hand, in the crypto asset businesses, so the direction is the diminishing the kind of the intermediary role of the transactions. So by using the technologies, I think our underlying concern there from the regulators is that we are gradually losing our capacity to intervene the kind of the crypto asset business by diminishing the intermediary function of the crypto asset businesses. So that's why, firstly, that's why we established the more proper governance system in the blockchain technology or crypto asset businesses. So that's why we established the begin first. So of course on the other hand, so we support the proper development of the healthy development of the the blockchain technology. So this is still premature stage. So of course, including the kind of the custodial management or key management of public key management or something. So that's why we first of all we would like to establish create the discussion point for multi-stakeholder to solve the underlying problem, especially on the blockchain technologies.
Yeah, I think it's a good point. Like, there's always this kind of gap. So like crypto native companies, they may have better understanding of the industry, better infrastructure build up. On the other hand, traditional institutions, maybe they have more financial resources, legal resources, regulatory resources to if they want to move into this industry. But on the other hand, on the base level, on the infrastructure level, they may not necessarily have the know-how. And that is, I think, where technology and service providers in this industry can fit into this bridging the gap. So yeah, I think that's one thing.
We should recognize it's probably. I think we should probably recognize it's a fairly ephemeral gap. If we're talking about firms like HSBC or Goldman Sachs, JP Morgan Chase have tremendously sophisticated technology capabilities. They haven't really applied them to this space yet, but we shouldn't assume that they are slothful sleeping giants or that they're incapable, because they're not. Yes, they will need help from specific technology providers. They don't write database management systems, for example, but they sure know how to take care of assets for customers. They know how to trade those assets effectively and make money on that. So we should recognize that they will play a role, I suspect, as this technology, especially the tokenized asset classes, bonds, both corporate and government, currency, structured products, derivatives, become prevalent. That's just my view. I'm not sure what the panelists think, though.
Yeah, I mean, look at for example, like DBS. Well, there was news about them trying to launch their own exchange platform. I don't know. So like for these institutions, when they try to look at custody services, what would be a better approach? Do they have their own in-house stuff, or do they approach industry players to? Yeah, what's your views from panelists?
I mean, I can speak from my experience. There's always not just in the cryptocurrency or digital asset class, when it comes to adopting new technology, they can always consider internally build or buy, right? And typically these institutions take dual approach, where there is a buy option to quickly jump into this game. And while they are kind of getting more familiar with this new business, then they can also decide to invest internally to kind of build things up, right? So it's not like these large institutions are going to put all the eggs in one basket. So there's going to be multiple different technologies, right? Supporting different workflows and different type of asset classes, even within the blockchain itself. So I think that's what we've seen with obviously our JV with Nomura, Komainu, they have adopted Ledger Vault, but I don't think they're going to stop there. I think they're going to continue to explore, how this market is going to evolve, and then to adopt accordingly as well. And then they are building their capabilities as financial professionals, but in this new space, dealing with crypto assets and digital assets as well. So there's going to be a lot of learning there. It's not going to move from 0 to 100 within a day, but I see most of these larger institutions taking that exact approach.
Yeah, I mean,
no, I would agree. Go ahead, SJ.
Yeah, no. So I was just saying, it's all valid points, but I think from just putting my hat on as a banker, I was at Morgan Stanley about 7.5 years before I joined OSL. The agenda for these guys in these bulge brackets or commercial banks will be the regulators, whether they comply with it, whether they check the boxes and the security, as everybody's pointed out. For example, we're engaged as the only company in Hong Kong with the approval in principle from the SFC with some of these guys for several years on some occasions. And it's a very different stack that they request. So they don't really take into consideration the ease of use, GUI, how pretty it looks, some of these things that the sales and the customer service guys often get feedback for. That's not of their concern. Their concern is it's more about the security and regulation side. So something that fits that box, something that checks those boxes, I think will be moving very quickly into mainstream because we're seeing the adoption. Like, I mean, just think about last year when everybody was pointing out custody being the missing block for installs to come through. There's a myriad of options now. Like, I mean, needless to say, like the biggest asset managers in the world, I mean, the bulge brackets and so forth. So they're not short of options. It's just that they need to be sure that somebody that they are facing will be able to come through with the lift when they're pushed and the times are hard. And I think that will be more important than for say like how easy it is to use, because some of these custody solutions, from what I understand, to your point earlier, Glenn, it makes a great photo op when you build your vault in the middle of nowhere in a desert, but you're gonna have to go there to pull your coins out, right? So it does need to be obviously easy to use, but security, I think, will be the primary concern for these bulge brackets.
Yeah, I think you're right, SJ. One other question: what does the group think about mainstream exchanges modernizing and changing the way they work, whether it's ASX, whether it's Hong Kong Exchange, whether it's what are your guys' views of that?
Jamie, are you talking about like the back-end solutions of the private blockchains, or are you referring to like the offerings?
No, I think I'm referring to like ASX, for instance, moving their entire clearing and settlement system onto a blockchain with the idea of being able to clear and settle tokenized assets in the near future.
Gotcha. Sorry, my wife's just coming in right there.
It's this great new world that we live in, you know, it's awesome.
I mean, it's going to come through with some cost benefits for sure. I think for them to I mean, it's
no, but we are seeing increasing numbers of. Go ahead, I say.
Yeah, I mean, everybody sees the benefits. Like, I mean, the narrative, while people may try to tweak it, however it fits their needs, the reality is it saves a substantial amount of cost and it's a more efficient way to go about things. In this scenario, like I actually think the big winners will be the so-called atomic swap / connector protocols, whereby like you're not going to have one size fits all. Like everybody has different risk appetites, everybody has different needs. In that case, the likes of Polkadot, Chainlink, Cosmos, these kind of connectors, maybe they're not there yet. Like on the mainstream for these bulge brackets and the more established companies of the world, they might not be too comfortable using a token that's been issued by an ICO that's only been around for a couple of years. It might be the case where they go back and put their own thing, like JP Morgan did with their coin. But I actually think that, as you pointed out, Jamie, everybody is trying to get on board with their costs and their back end by just streamlining things on a blockchain. The connectors will have to get involved, just like State Street, BNY Mellon, Goldman's, all these custodians speak to each other. Like the problem we have right now is everybody wants to be a super custodian. They don't want to talk to anybody. Like these exchanges want to keep the coins on their platform because they can rehypothecate it. There's going to have to be at some point a reckoning that, number one, you can't have one person managing billions of dollars worth of private keys. It's a clear breach of, in my opinion, fiduciary duty. There does need to be checks and balances, and something that meets those profiles will, I think, come to light. Maybe it's here already, like Polkadot. Maybe it hasn't. We'll see.
Miwa-san, any views from your?
I think
yeah,
thank you. So I think I mentioned something about the future aspects of the decentralization of the financial businesses, but still we are in the kind of centralized kind of transaction, and of course the if CBDC issues, so as the guys mentioned, so we have the more centralized management security system for proper digital currency management or something. So of course the from the regulator's perspective, so we should be flexible to the future aspects, because we are also envisaging the decentralization, future landscape of the decentralization of the financial business. And of course, we are looking at the kind of centralized management of the this is a conventional type of the financial management. So well, we are looking at the always looking at the two direction of the financial businesses. So especially in the digital context, of course, we are very highly looking forward to the having the good solution in the custody system, because the custody is a very key function for the financial transaction. So we are also looking at the the further development in the stage of the custody security development something. So we would like to discuss in the dialogue with the developer side and of course the operator side. So to make good solutions to the community. So thank you.
Yeah, it's, I mean, if you're talking about like looking forward to the future, like I guess there are more regulatory development to bring more clarity that where institutionals can play into this space, and also different service providers are also evolving as the crypto space matures. I just wonder how how's the views about what is your business like going to evolve? What's the future plan? How your product is gonna evolve and fit into this kind of developing narrative of institutional embracing digital assets?
Okay, so maybe I can start. We, like I said, Ledger is not financial institutions. We're supporting
Right.
financial institutions with whatever needs that they have from a security perspective or insurance perspective, as well as complying with the regulation, whether it's security regulation or around governance, and connecting to third parties as well. So that's where we're going. So we take feedback from various types of institutions, including the crypto natives. And I don't think the convergence has really happened yet from the crypto natives kind of coming towards more of the regulated financial institution side, and then the larger incumbents coming towards the fully adopting the digital asset side. But I think we're kind of heading towards there. And to Wolfie, your point about DBS, I think that's one of the evidence that the convergence is coming. So we are. I believe if I'm to draw a picture of where Ledger's business is at, we're kind of right in the middle. And then the requirement could be different, but having the open nature of different blockchains and feature to adopt on top of the core technology stack is very important. And having the nimbleness of connect to different third parties that may require that may be required by kind of like an adjacent regulation, such as travel rules and AMLs. These are very important. KYC, KYB, KYT. I think that's also a role that Ledger as the custody technology stack should also play as well. So interoperability, being able to support different types of blockchains that may have different features, whether it's decentralized or centralized, we're quite agnostic. We don't judge. So I guess that's at least from a technology provider's perspective is our priorities going forward. I hope that's clear.
Yeah, I mean, maybe I can just add to that. It will be contingent on the entity that we face, right? For example, if it's an asset manager, a long-only fund, I can't imagine these guys trading it around, trying to make beta. They'll just buy and hold. And that's actually the narrative that we're seeing right now, right? Like everybody's talking about add like a single-digit component to your portfolio, your Sharpe ratio improves, your alpha goes higher. So they're just keeping it as a hedge. That's the way I see it. But as these, I guess, buy-side kind of guys get more involved, which we're seeing coming in daily, they'll be demanding more of a heavier stack tech build out, because these guys will be wanting to deploy similar strategies that they have in equities, long, short, multi-strat, all that jazz. And you can't, it's a very different solution that you need to cater to somebody who's trading in and out like high frequency quant fund, as opposed to somebody who's just buying and holding. So it goes back to that. And then the second thing, just on like the regulatory side, because that's quite important, obviously. What we're seeing in Hong Kong is that the SFC has actually cleared the way for Type 9 licensed funds here. So just so in case people don't know, 9 different types of activities licensed in Hong Kong. Type 9 bestows the right to run professionally a fund. So these guys, there is nothing stopping them from accumulating coins right now. There's no red tape they have to lift. There's no tech requirements. There's no filings. It's just that so long as it doesn't breach their mandates, so long as the LPs are in agreement, they can do whatever they want. So we've seen the guys who have the least LPs to convince, i.e. the family offices and the high net worths, because if the family likes it, they go, right? And then we saw the smaller hedge funds come through, the guys with a few LPs, so it's easier to form a consensus. And now what we're seeing is the bigger boys. These guys are slowly having a look. They're looking at proxies. I can't imagine the likes of these sophisticated hedge funds going net long in something like GBTC. That's just outrageous. Just like I can't imagine something like Rentec going net long and the CMEs. Like everybody attributes the open interest to them. It'll probably be the follow-on guys too, you know. So just to sum it up, 2 things, right? Who are we facing? Is it the buy side? And if it's the buy side, what kind of fund are they? And if it's the sell side, what they're looking at? And number 2, does it breach with the regulators? At least in Hong Kong, like there's nothing stopping these guys coming through. So the onus really is on the service providers, I think.
Do they put any specific requirement on like where should you like store your assets?
No, there wasn't any wording of that. That was what was quite interesting, because the hoops that we're jumping through are there's a long list of those, but it was very interesting to see that so long as it wasn't breaching their mandates, LPs are okay, they're fine. Just make sure they don't lose it. Yeah, that was the message really.
Interesting.
And I mean, on that point, I think, on the storage point, I think, regulators should have an open view. I mean, they shouldn't really judge what kind of technologies or to endorse a certain technology over others. Obviously, the clear guidelines would have to be there. But in terms of how, each of the players may approach using different technology, different processes, that should be like an open thing. And then later on, when the regulators actually do come to regulate, then, I think cybersecurity agency, there's a lot of government kind of back cyber security agencies that are doing these thorough assessment together with the regulator, as their role in terms of managing the operational governance and having oversight over them. Should be the way, should be the role of the regulator in my perspective.
Miwa-san, what's your take? I guess this is you can help us kind of wrap up here. So like looking to the future, like is there any like new development in terms of regulatory framework around digital assets in Japan? That is
not specifically. Not specifically. We are just coordinated the regulatory treatment in 2019, and this is as I mentioned, currently the day 2 regulation is in the implementation phase. So we do not have the additional regulatory requirement to the crypto asset businesses, but we are under our regulatory oversight, so we have to closely pay attention to the governance or internal management of the crypto asset exchange, or including custodial service providers. But on the other hand, so as Graham mentioned, so we are always open to have a discussion in the technological side. So that's why we, multi-stakeholders set out the new framework of the BGI and Begin for the discussion point to openly discuss the kind of operational issues, governance issues, or technological issues. So please join the Begin website. So we have the big we call the BGI and the block number 1 will be held during the week of the maybe November 23rd to the November 25th. So please visit the Begin website. So everyone join us. So of course I'm also joining the conference. So we would like to set out such kind of the good platform for further discussion with various stakeholders. Thank you so much.
Yeah, definitely. Interesting. I'm looking. So at least it's good to know that there's something in the pipeline that is aiming to bring more clarity into the space. But yeah, I mean, I wish that we could have more time to discuss, but I think we are kind of to the limit, and so I guess I have to thank everybody for joining us. And thanks for everyone who tuned into our show. Hope the discussion we have been talking for like over the past hour has been kind of insightful and bring some knowledge to the space.
Thank you,
everybody.
Thank you.
Thanks, everyone.
Thank you, Sawang.